Good evening, everyone. Right, going forward, I will be doing video recording instead of the real-time Zoom meeting because first the attendance seems to be limited because some of us has forgotten about the meeting, and then some of us got the wrong meeting time. And also, when we do live, we are restricted to 40 minutes, and sometimes it's very rush. So I think doing a video recording will give me a proper time management, and also for everyone who can actually view this video in their leisure time. Okay, so let's start off with this video with the index analysis. So as shared last week, I mentioned that STI at the beginning of December tend to have some weakness before they start to bottom up for January rally. So as of now, it hasn't happened yet because STI is still holding above the support level. And the support level here we have to look out for is 2792. Okay, and in fact, the closing today is also not too bad. Close as a white candle. So if STI can overcome this black candle with another white candle over here, then we may have a chance to go for more upside. So if the market is still bullish, maybe we will be bullish throughout December, January. Then in February, then we will start to see some weakness because historical action told us that shows us that actually the market can be bullish for 3 months before they start to 1 or 2 months or 3 months before they start to have some correction. Okay, so just to share with you how it looks like. In fact, I have done that last week as well. So if you look at uh, 2019. Okay, in 2019 we have January. So January we have the market bottoming up from the December bottom over here all the way up 7.8%. Then it start to pull back like now. Then it rally by another 4%. Then it start to pull back. The pullback is about 3 to 4%. Then after that we have the final rally into April. So here we have 1, 2, 3, 4. Okay, in fact, we don't count March because March is a slight pullback. But then generally we have 1, 2, 3 upside before the whole real correction comes in, where STI corrected I think, sorry, a bit fast here. STI corrected about 10% before the recovery. So let's take a look in 200. So 2020 is where we see an exceptional year. So of course we don't need to compare, because if you look at 2020, we start to have announcement of COVID in the middle of January. The market start to be fearful with this gap down, and then there's some rebound because it was not thought to be so serious. So there was some rebound. Then when the full outbreak happened, then this is where we have the major selling took place, which we saw market went down by 31% before we recover until today. So will 2021 be a better year? Well, I do see a lot of reports that a lot of countries are, injecting vaccines for their citizens, and of course, vaccines. Many say that vaccines cannot immediately kill the virus because first the logistic issue. Not everybody can get the vaccine, and of course, there are a lot of a demand in terms of like countries like India. A lot of people needed vaccine, so the supply cannot really keep up as fast as the demand. So as such, the market may still be volatile in 2021 because of the on and off news about the COVID, and then of course the best scenario is where we see the whole COVID go away, then the whole market recovers to where it's supposed to be. So if the market were to recover, STI used to trade in a range 3,042 to 3,290. So if we were to recover to a pre-COVID situation, this is where we expect the market to hit. So let's see whether we can have this COVID do away in 2021, and then let's see whether the market can go to that high. Now, this is about the STI. So we are looking at the market potentially looking at more bullish upside if the support didn't break. Okay, so as I mentioned earlier, that the market can still go for a lengthy of bull run, right? If it doesn't break support. Okay, so here we see the sign here. So we've got to look for more sign to tell us whether the market can really go for that extraordinary bull run. Okay, so the support to watch 2792, the resistance to watch 2855, and then of course the high to clear is 2921. Now let's look at the banks. We'll go sector by sectors. We'll go through stocks that are interesting that is coming along. Some sharing for you, right? Just in case that you miss any of the run. So hopefully we can find some trading opportunity over this video. So let's take a look at OCBC. OCBC Bank has actually been testing support for the past sessions. In fact, this week, these two sessions, as this OCBC is actually trading at the low where it has been testing support. The support range is 988 to 994, and today it ended as a hammer again. Okay, and here this is a very critical point, similar to STI. So if OCBC can hold at this support and rebound, then we see STI has more upside. But if OCBC were to break below this support, then we got to be watchful that the market may go for some more correction. Another 3 to 4% or 4 to 5% is quite normal, right? Why we need to watch this particular support? Because we have signs of lower high, we have signs of lower low. So does this means that market will really go into downtrend? Like I say, we watch for support, but could it mean that we can't buy OCBC? In fact, of course, this hammer is some trading opportunity as well. If we can have the hammer confirmation. Now, the only concern here is even there is a hammer confirmation that this OCBC may rebound, right? It has to clear this near-term resistance, which is over here at 10.14. So if OCBC can break out from 10.14, then it could extend its bullishness. If we were to look at the other two banks, in fact, they look almost similar. I would say not the same, but similar, because we cited lower high for UOB, and UOB also tested support. So if all three banks break support together, like DBS is also very near to its support level. I think DBS has the most bearish chart where it has a double top. So in this view, I would say that the banks are not going to be alone. So having said that, means that usually they run together. So when they run together, typically if you see that if DBS drop, UOB drop, OCBC very seldom will go up by itself. So therefore, I would not actually initiate a long on this hammer as yet. But if we are talking about going in terms of trenches, I would believe there is a way. Like for example, I will split my lot size into 3 batch. I will buy the first batch at this support level. Say I'll buy total I would like to buy 3,000 share. I'll buy just 1,000. Okay, and if the support breaks and OCBC goes to the next support, or all the banks goes to the next support, then I will look for the next hammer or next signal. Then I will buy another batch 1,000. So if the OCBC continue lower, then this is where I probably will be scooping another 1,000 at the low and the lowest point that I can see. Okay, so how do I know that it's a lowest point? Well, normally we will look for major support. Like for example, OCBC is a major support at 885, and then OCBC has a major support at 840. So these are the levels that you can watch. Okay, so what is going to be with the market depends on whether the banks can hold at the support, but the risk is there, the signs are there. We see lower high, breaking support will potentially see some downside, but not a persistent downtrend, because ultimately, fundamentally, they have not changed much, and then they are still fundamentally very strong. Okay, so just watch for the support level for the 3 banks. If you can't remember the support, you can review the videos over and over again to get the numbers. All right. Now let's look at the tech sector. The tech sector has been pretty weak in a sense that for the past 1, 2, 3, 4, 5 trading sessions for AEM, it ended up lower. Okay, or rather it ended lower in 4 sessions, and then now it is right at the support level, which is the 20-day MA support. Now, if I were to look at the weekly chart over here, all right, this actually explain to you why AEM is quite restricted in terms of its upward movement, because if you look at the weekly chart, it has the 20-week MA blocking it, and of course the long upper shadow tells you uncertainty, and right now it has a so-called confirmation. So this confirmation may lead to more downside for AEM, right? But from the daily chart per se, we have to confirm by it breaking below the 20-day MA. Now, if AEM rebound from this 20-day MA and retest the high of 368 or 367, then we can see the weekly chart change totally, and then there might be a chance where AEM pierce above its 20-week MA, and that will be a good sign. Why? Because once it pierces above its 20-week MA, then we can potentially see more upside. And where are we expecting? Based on the weekly chart, if we can see that the AEM pierce above its 20-week MA over here, then we will be looking at potentially going for 395 or beyond. But this is still too early, so we got to see first rebound. Next, we have HighP. HighP is the strongest counter among the tech so far, by far. So we see that it actually formed a resistance at this level at 180. Today it actually opened lower and was sold all the way down to 165 before it fought back strongly to close at a decent level. So the uptrend is still intact in such a case. So what happened is, if HighP is going to break above 179 again, then this increases the chance for more upward movement. And the next level to look out for will be around 198 to 199 level. So if it doesn't break out, then probably is also a good sign, because if it doesn't break out immediately and start to consolidate like this, it is also a good sign. Why? Because it gives us chance to enter into the stocks. Okay, the second chance to enter into the stocks again. Okay, so do continue to watch for HighP's development for another clear entry. So far, the clearer entry that I can see is just a breakout, but I think that everyone would like to buy at a more affordable price, a decent price, rather than at 180 or 181. Okay, let's see whether we can get it at a more respectable price. So the best is, of course, if it can hit onto 161, test support and rebound from there, is also very much welcome. Now, if you are looking at weekly chart, the weekly chart seems to be telling us that the stocks is right now trading at the overbought region. Of course, like I say, if it comes back and pull back down at a more decent level, more affordable level, I would say, then of course it makes it more compelling, like what the weekly chart says, that there may be some pullback, but the weekly chart is still slow. It's just usually we use weekly chart just to make sure that the health of the chart, the trend of a company is still healthy, intact. So looking at this daily chart first, referring to a daily chart first, let's see how the stocks price would move going forward. Franken. So when we come to Franken, we can see that Franken has actually stuck after it breaks out. So after it has broken out from 110, it actually tried to trade higher. It went as high as 120, but it didn't manage to touch its resistance, and in fact form a minor resistance now at 120. Now, if I were to draw a short-term downtrend line over here, so here we really need Franken to clear above this short-term downtrend line in order to move higher. So Franken actually tried to move up to 118, but the closing is quite disappointing. So going forward, we may want to watch how Franken would move. So if we were to see Franken break out above 120, then it's safe for us to target. If we do see Franken break above 120, we do have a good chance to take profit at 125 or 126 range. UMS is sitting at support level. Right, the chart is not that bad as yet. Why? Because it is sitting at the 20-day MA, and although the candles itself is not really convincing, because you can see a lot of candles close up together side by side, but the hope is where the support holds, and if we have a solid white candle comes in, then we have a chance to, if we see a white candle comes in like this, right, take note of the trading volume. The trading volume is also equally high. Then we can see UMS finally breaks through 1.08 and then go back to its high at 117. Okay, so the next counter will be Valuetronics. Is another counter very similar to UMS, doesn't really move upward much, so it is quite slow. So again, like UMS, we really need some strong buying action comes in. So the only difference here is if you look at the Valuetronic, it had a nice white candle here, and look at the volume, it actually picked up, but unfortunately there isn't any follow through buying. So the buyer just stopped there and then doesn't want to break resistance. Probably you realize that he's way too early. So the only consolation here is support still hold. The candle is black, but the volume is not high. So at least this is still an encouraging sign, right? There are not a lot of selling pressure going on for this counter. So we really need to have the white knight to come in, and a strong white knight, so that it can push this counter above 605 to where it's supposed to be at, probably at 68 level. Okay, now the tech sectors generally still look like it's moving upwards with Hi-P, Valuetronic, Franken, and UMS. AEM is still a little bit weak, but it managed to hold as support today. So it's overall not as bad as you know you would imagine. Anybody would imagine. Okay, so yeah, one final counter that I just want to cover, which is Venture. Right, Venture actually touched the high of 1920, right, above the 20-day MA it was, but ended up closing lower. So if this counter fail to rebound tomorrow or the next few days back to 1955, and instead it comes down to 1870, so it's going to form the descending triangle, and the chances of it breaking support and go down lower is there. Okay, but again, the it is still way too early to say, so we're going to watch, right, whether will it come back to test this major support. So if it come back to test this major support, it is not going to be friendly to the bull. So AEM and Venture seems to be not as bullish as the rest, but then it's still not as bad, so we still have to watch further. Okay, so for those who are interested in the tech, I do see some chance with UMS and this Hi-P. So we have to just got to have a close eyes on it. Now today the tech didn't move much, but the medical counters moved quite a fair bit. Okay, so starting with MedTech. MedTech actually had a very nice movement where it had been hugging its 20-day MA. You thought yesterday it's going to go lower because finally it closed so-called lower than the 20-day MA in a more significant fashion. But today, the higher opening and the higher closing has erased that, and not to forget, look at the buying volume is significantly higher than the selling. So this is actually a good sign. So the next resistance to watch is 107, and of course the MA is on top here, which is the 50 and the 100. So the other counters that ran up is also Top Gloves. You look at Top Gloves hitting its 20-day MA. Okay, so if you look at Top Gloves, this run is particularly important because it actually break out above its so downtrend line over here, and this actually can help to negate the descending triangle that it was forming and almost about to break down. Okay, so going forward, it need to pierce above its 20-day MA, and then comes to 260 in order to recover, and then of course try to negate its topish formation where you see a huge double top over there. Okay, and same for UG Healthcare. If you look at UG, it actually broke down from its descending triangle. Now the good thing is, you look at this breakdown, the trading volume is actually not high. Okay, so it means that there's only limited number of sellers there. And then of course today it rebound, it retests its support turn resistance. So going forward, it really need to cross above that resistance and its 20-day MA in order to continue to move higher, and then of course change a trend. So you can see that out of the three medical counters, MedTech has actually the nicest chart so far. If you look at the weekly chart, the things that we really need to watch out for is, of course, top MedTech must move up to test 107 and break up from it. So from the weekly chart per se, you will be able to see that it negates this bearish formation, right? Look like a bearish flag, and then you can start to change a trend. Now, of course, not to forget Riverstone. Riverstone has also rebounded today after many days of downside, but unfortunately, Riverstone is below its 200-day MA, and this rebound, right, saw that it tests 200-day MA as a resistance, but had not broke out from there. but the candle patterns are quite encouraging. Look at MACD and stochastics are turning up. So going forward, we really need to pierce above its 200 and then pierce above its 20-day MA in order to start to change a trend. Now, if I were to look at the comparing to the low, in fact, there are signs of this bullish divergence. So potential change of trend could happen. So it is really important if you look at all the four charts of the top gloves lah, UG Healthcare, Riverstone, MedTech, all the medical gloves, they really need to pierce above its resistance in order to start to change its trend. Okay, but I personal view is I would think that this medical counters are going to be volatile going forward because of the on and off vaccine news, and then probably there will be more news of more delivery, more productions of vaccines coming in 2021 as everybody reaches to the final stage of the trial. Right, most of the vaccine counters companies has announced a 94 to 95% success rate, and this is going to make the gloves counter volatile. So do take care of your positions. Do not be too overly exposed into these medical counters where if you can't take the swing, right? Probably we should avoid these kind of counters. Okay. Then we are going to talk about this Singtel. Right, we are going to go there to look at Singtel's chart. Why? Because very interestingly, for those who are following my emails, I post Singtel on a Friday morning, right? Citing that the potential rebound from its MA support. And at that very night, at that very same day, the night itself, it was announced that Singtel won the full digital license, and this is where we see Singtel on Monday gap up and then charge all the way to where my target was, the second target, which is 249, and it went beyond. It went to as high as 260. But during the very same day, profit taking start to comes in real quick and real fast. As you can see, the long upper shadow and the long black candle. So no doubt Singtel still closes at a high compared to the previous day, but this is still not a very encouraging sign. Now, if you look at the indicators, Singtel is sitting at its 200-day MA, and in fact, it does look encouraging to me. So I'm a bit 50-50, half-hearted, because right, on one hand, the black candle tells me that there's a lot of sellers, a lot of people willing to sell at the lower price to take the profit, take the position off the table. Of course, you might argue that, hey, there are people who buy, but those people who buy from these people who are willing to sell maybe sees the digital license as a good news, whereas the rest are skeptical about this. Why? Because that going forward to implement this digital banking system, right? First, it must attract us to deposit money with them, and in order to do that, they must offer higher interest. And to pay higher interest, it is a cost to them. Second is of course the way that they monetize all the services. Like for example, they give out loan, and how efficiently they are going to do that. What is their market size? What's their target audience? Right. Of course, if you have read, their target audience are small, medium-sized businesses. They are targeting probably some small loans rather than those big size loan. So it boils down to how well they actually implement this so-called all these processes, so that going forward is going to be beneficial, and then they can break even faster. But looking at the chart going forward, I'm a bit this what we call the tempted, right, to have a position at this 200-day MA, and because if it can hold at this 200-day MA, the rebound is going to be nice and fast. But having said that, like I say, I have 50-50 over here. So I would think that, again, like OCBC, I will have three tranche kind of investment into this potential going forward potential counters, where I will have the first batch over here, right? Then if it start to change its trend or go lower, then I will wait for another technical signal to add another one, and the last one will be at the bottom. So if I happen to drive across a confusing signals over here, I apologize for that, because there are way too many methods to do investment. Okay, one method is, of course, outright look for signal trade, right? If the chart is clear, we trade. If the chart is 50-50, then we have to look at what kind of counters are we trading, right? Like for example, Singtel, we do see some potential in this digital bank going forward, and then now seems like the chart is moving uptrend, but then we are skeptical of the recent seller, the yesterday seller. So that's why we can have a part trading, part investment type of strategy, where going forward we can actually make money out of it. Okay, same for OCBC. We do wary of potential downside, especially everybody's at support, and then there are lower highs. But then if it doesn't break below, we still see chance of rebounding. Okay, similar for Singtel. So that's why, therefore, the trench investment, the one batches investment takes place. Okay, so if we buy one batch here, if suddenly Singtel rebound and charge all the way up, our first batch is still profitable. Okay, we are still part of the growth with Singtel. Okay, now of course, on the flip side, when Singtel benefit by 10%, its rival, right, iFast, actually did not do very well on the announcement. Right, on Monday, it actually gapped down. With this gap down, it actually erased off this nice, beautiful uptrend, which I was part of it, and then I got a stun on Monday when the whole thing gapped down. Of course, based on its fundamental, I shouldn't cut loss, because anyway it has gapped down so much. So this is where I have to fall back to its fundamental, where it is not it's a good fundamental counter. So so with this strong rebound here, filling up part of the gap, we still see more challenges ahead. So I'm going to trade more on this counter, but I need to wait for a better setup. So in order for me to add more positions, and then take charge of my position, earlier trade, right? Just to see that if the counter can recover upwards, then my break even will be lower, and I can see profit faster. So so do keep a lookout on this counter going forward. And next, we are going to talk about the oil and gas. So we have Keppel Corp. So Keppel Corp rebounded on the hammer, right, giving us a nice confirmation. Unfortunately, it couldn't clear its 200-day MA as yet. The trading volume is not that strong. No doubt it was up, but it's not as strong as what we would like to be. But it is still not bearish yet. So we need it to clear 530 and then go all the way up to 550 in order to exhibit uptrend. So especially for those who are holding Keppel Corp, would like it to go back to 547, 550, and then we can see a eventual trading level at eventually it might trade to 620. Okay, so to analyze further, right, if you look at the weekly chart, okay, there are some challenges here as shown on the weekly chart, where we see some upper shadow and lower shadow here. So this is a bit uncertainty. So going forward, we really need to see capital show some sign of bullishness in order to go higher. But if it doesn't, right, from the weekly chart per se, or rather the daily chart per se, then we may see that if it doesn't break above then and break down its support at 502, then we may see some downward movement. Okay. For that, we would move to Sembcorp Marine. Right. Yesterday wasn't a good day for Sembcorp Marine, despite the nice closing on Friday. Sembcorp Marine actually failed to follow up on its strong buying. In fact, it pulled back. So we can blame it on the 100-day MA, or technical traders will be blaming it on the 100-day MA, where it may be resisted from there. But overall, Sembcorp Marine is still not so-called dead yet. Why? Because we see the support here at 1.6 is still there, and then what we can see some rebound going forward. Then Sembcorp Marine can resume its upside. Okay, the flag is still intact. We just need some another strong buying to take place above its 100-day MA over here. Then we can see more movement towards 225 or 230. Okay, then this counter Sembcorp Industry. Okay, so as I have been covering Sembcorp Industry quite extensively in the past, because the uptrend was quite nice, with it piercing below the 20-day MA, may shaken the uptrend. Although the higher low is still not yet compromised, because it haven't really tested back its low at 167. But going forward, if you see that it breaks below this support 173 rather, sorry, 173, and test back 167, then this is where we got to change opinion on this counter for the time being. Short term, there might be some weakness before it start to recover. Now, the reason why Sembcorp Industry move in this probably is because due to its announcement on the impairment write-off, 89 million impairment write-off. But they also highlighted some positive side where they're going to be cash flow positive. So I guess that market choose to sell down now tested support. So let's see whether support can hold and then rebound back to where its high was, where it tested 180, 189 level. Okay, so for me, my Sembcorp Industry, I have taken profit when I saw the selling over here. So this is where I decided to take the position out of the table and then reassess again to see if the uptrend can still remain intact. I may re-enter into Sembcorp Industry. Okay, so with this, these are pretty much most of the counters that I would like to cover. Right? Yeah, one more counter. Yeah, sorry about that. It come strike my mind over here. Jardine CNC was requested by one of my clients. Okay, if you look at Jardine CNC, the past 2-day performance is actually quite bad, not bullish, I would say, because it struggled at this 20-day MA. And typically, if theory applies, resisted by 20 MA, pull back down to the support level, which is for this Jardine CNC, is 1941. So if we were to touch this support level, okay, we may see some more downside back to especially if it breaks below this support level and this MA that are just right below this 1941, then the next major support to watch out for is 1770. But nevertheless, it hasn't happened yet, so anything can still change. Tomorrow maybe a long white candle, but overall we have to be careful. There might be some potential change in trend on a lot of counters going forward. So take care of your position, not to get overly loaded, over trading, not overly loaded in one counter, no over trading. And of course, keep some bullet for the ultimate trading opportunity, just in case some good trades comes along, you can take it. Okay. And before I end this video, I just want to highlight that, of course, if you would like me to mention some counters, to analyze some counters in the video, you can actually WhatsApp me, and then I will take note and I will analyze it during the analysis. So then we can benefit from all the sharings and all the stocks that you are looking at. Okay, and just to conclude, right? So we can see that although we see some stocks moving up, some stocks moving down, the chances are still not as clear, as crystal clear as we would like to have. Like earlier in November, we see crystal clear entry for CapitaLand. Then we have ST Engineering, crystal clear entry, and then we also have some good run with the banks. Okay, so now seems like the market is moving up and down, right? In its good old days way. So got to be careful, right? So with this, I'll see you next week. I'll give you a weekly updates on the market through the video. So with this, take care and stay safe.